Hi guys, welcome to the Savvy Money Show with me, your host Sean. Today we're talking about the new SPAK ETF, and if we get time, a few other things. Well, so as we see, it's saying blank check ETF may be coming after the surge in SPACs. Basically, Friday they submitted a form to the SEC, and there's not a lot of information about it. You see, more than $21 billion have been raised through 51 SPACs so far this year. 145% surge from this time last year, and we're getting more and more SPACs coming through as more and more of these are becoming successful because they're quicker than an IPO and they don't have as many stringent regulations as an IPO. Now we're going to go and have a look at a few things. Now we have the fact that Defiance are the one who are bringing it out. Defiance have brought out a few other successful ETFs, such as the Quantum ETF, the 5G Next Generation ETF, and a few others. Now, they generally go up. Problem with Defiance is they usually charge a bit for what they will give back. However, considering it's a SPAC and they generally have a run up, there's SPACs all over the place right now, and to tell the truth, we can't keep track of all of them. There's so many. Now, the thing is, we try to do as good a job as we can. We know the typical ones like SHOL, OPES, Foreign Merger, but there's other ones as well, like Gig Capital too, that, you know, nothing, where they're not doing all the hype, they're not doing the marketing, people aren't really paying attention to it, so it's just staying more or less flat. It goes up a little bit and then down again. They issue a letter to the shareholders, they don't do anything publicly. And now back to the SPAK ETF. Apparently it's going to be in healthcare, tech, fintech and industrial SPACs. I don't know how it's going to work being a SPAC, but I've heard that it's going to be 80% SPACs, 20% newly IPO companies. So SPACs that have actually merged. Because I was thinking, what's going to happen? Are they going to wait until there's a spike up in price and then sell? Or are they going to wait until the merger and then sell, because they're no longer SPACs once they've merged? But if they do that 80-20, it will make a bit more sense. Now, if you don't want to go into SPACs because you find them a bit too risky for you, there's always the Renaissance IPO ETF, which tracks the IPOs. It's a bit more expensive, but this usually keeps hold of the IPO companies for 2 years after. Personally, I would rather keep hold of the company for longer than 2 years, because it would take it a year or two to start getting its footing. So if you're going to invest in ETF, I would rather be in one that isn't an IPO only. And don't forget to hit that lovely like button, almost as lovely as me. Helps with the YouTube algorithm and getting the video out to more people. And don't forget to hit that subscribe button if you haven't already. Become part of the Savvy Money Show family. We give each other hints and tips and updates about stocks and shares we talk about on the show. As well as that, you can ask me to look into any share you want, and I don't charge a Discord fee or ask for a Patreon. All I do ask is for you to comment in the box below and hit the like button. Even if you disagree with me, especially if you disagree with me, I like a debate, and if I do something wrong, I want you to call me on it so I can improve the channel. And why not check out the links in the description below? There's lots of others. I've used each one of them myself. I wouldn't give you links if I haven't checked them out myself. If you're looking for a free trading platform which should trade your stocks and shares, you know, you can get a free share worth up to £200 for signing up and depositing a small amount. A free trade only requires a £1 deposit. The others require £100 or dollars, depending on which one you go for. Stake has over 3,500 US stocks on their books, which is the biggest one outside of the US. Whereas Trading 212 is one of the best and easiest platforms to use. But as I said, I use all three. Anyway, on with the show. Now guys, there's a couple of other things I want to speak to you about when it comes to SPACs. Firstly, I don't know if you've checked out Reese Haslam's YouTube page. As well as that, he has a website called spackspy.com. He had the ump about the only other SPAC website charging £45 a month, or $45 a month, for SPAC updates, because it was the only one out there. So he got proactive, set up his own website for a quarter of that. The more people that join, the more chance he can bring down the costs. However, if you see here how he keeps it updated, and you know, he does put a lot of work into it, and suggest you check out his channel as well. And if not, his website. He does keep the website free. It's the subscription fee is just for the email alerts, and to tell the truth, the email alerts could be difference between a couple of dollars in the SPAC. Now, if you're buying a lot of that particular SPAC, it could be worth it in the long run. That's something for you to decide, but I suggest you check out his website anyway, whether or not you're doing that. Something else to say, I've been working on some t-shirt. I've been working on a t-shirt for my show. This is this is making me look fatter than I am, and I didn't think that was possible. For the show, I don't know if you can see it properly, and this is a first attempt. This is a homemade attempt, by the way, so don't think this is a professional attempt. I'm wondering what you guys think. Next attempt will be a bit more professional, and it will the colours will be better. Just wondering what you think. Don't worry, I'm not plugging these for sale. These are purely for myself. Anyone who sees me walking around looking at it wearing one of these, you'll know why. And on the next thing, we go on to we're heading away from SPACs now. Some questions. You know, I said about Jumia Technologies, how they have their earnings. They have had a run up, and they're coming back down again. Now, it's a very volatile stock, as you all know. I am in it with no risk now because I sold out my initial investment, and when it has a run up like that, if you can do that, it's the way to go. People who bag hold on a stock like this that is extremely volatile, thinking it's going to go to the stars, you've got to be careful, because it could. People are thinking when Amazon does well, this does well, and sometimes that is right. Before earnings, people see Amazon doing well, and then they think all e-commerce stocks are going to do well, so they jump in without doing their research. Problem is, this could do terrible. This is a totally different market. Unless you have gone through all the African e-commerce calls and gone through Amazon's African side of their e-commerce, then you've got to be careful. Do not be caught holding a bag. It has had a pull down. If it pulls down below $10, then I will be interested in picking up some more. However, at the moment, I'm going to wait, and that's my talk on that. Now, we are speaking about Geron Corporation. It's a penny stock, and there's nothing major about it. It's announcing the results on the 6th of August. Analysts expect it to report a 25% year-on-year improvement. Zacks have it as a buy. I think it'll do well, but you've got to be prepared in case it falls flat. Now, the thing with Geron is, if you look at its balance sheet, you will see there's 30 million liabilities and its current assets are 141 million. So it's not exactly in a bad position financially, you know. Or you can, the forward PE, I think that's crazy, you know. Price to book 2.79, you know. Yeah, if you look through all this, it's, I just think it's one, it's a penny stock, yes. I think it's one worth taking a chance on. If it has a good earnings, it could jump and you can make a bit of profit. And book value per share is 60 cents. You know, now it's in a good financial state. You're paying $1 over the book value. It's about to announce second quarter results. Of course, Yahoo Finance is out of date, but when only has 4 million, when it only has 1.3 million shares on the market, I think it's worth taking a chance on this. I wouldn't go all in on it because it could always disappoint, but I think it's well worth it. I would like your opinions, please. If you don't mind leaving a comment in the box below, helps with the YouTube algorithm, and so does a like. If you don't mind smashing that lovely like button, it's almost as lovely as me when I'm not in this t-shirt, of course. And if you don't mind hitting the subscribe button, I'm overwhelmed with 170 subscribes. In my next video, I will be talking cryptocurrency. I will also be opening up my stake portfolio soon, so make sure you check that out, and I'll see you soon. Goodbye, stay safe, stay savvy, stay investing. See you later. Hi guys, this is Sean from Savvy Money Show. Now, I don't know if any of you guys have had any of your stocks being sold off by Trading 212. I mentioned before about it happening. They have been selling off all my SPACs without my permission and without any notification. I contacted their customer service. First thing they said was, oh, someone else must have had access to your account. I said, no one has access to my account. I'm very stringent on that. Then they said, second thing they said, it was to protect you from going into... the second thing they said was, the order was placed from the same mobile device you're using. I said, no, it wasn't, because I never placed the order. And then after an hour of being on with them, they said it was to protect you from going into a negative balance. And I said to them, I wasn't in a negative balance. I wasn't at threat of. I had over £500 in my account. And then they said, how they would look into it and ask me to email into their customer service. And I complained, well, I thought you was customer service. Basically, they're customer service just to take feedback. They're not proper customer service. So I took the email address and they didn't get back to me. So I contacted the FCA, who gave me another email address for the compliance team, and they're kind of asking me to send the same information again and again. So I will give them a week, come back with a proper response, then I will be contacting the financial ombudsman. Firstly, I've checked the terms and conditions. They are not allowed to sell my positions. There's nothing in the terms and conditions allowing them to sell my positions without my permission. The only account they can do that with is a CFD, not an investor ISA, and that's when you're leveraged. Now, the second thing is, I don't know if you follow Reese Haslam, and if you're into SPACs, you might want to. He's always on top of the ball. Now, he had that issue where basically with SPACs Trading 212 had issued units instead of shares, because I'm sure you're aware, when they first get issued, they get issued as units at the same price as shares eventually. So you get the units about $10.40, $10.40 to $11 when they first come on the market, and then they go up, obviously, and the unit is usually a share and a warrant originally, then a share and a half a warrant, then or a share and a ninth of a warrant, however they make it per company. And then they when they go up, they issue the shares on the market, and say for instance the units are now worth $12-15, the shares will be go on the market for $10, and that way they do it in tranches. And by going specifically by the units, you have to do the .u after the share, or for the warrants it would be .w. If you just want the shares, you don't put any dot or anything after the name. Now, I was under the impression I didn't have any units, I just had the shares, and I'm assuming here, I'm doing a lot of assuming, but I'm assuming it's because I held the units and not the shares. Now, to tell the truth, I always want to hold units, but if that was the case, I'd rather they notified me and come to an agreement with me, than just sold it, because they waited until a dip in the market, until I was making a loss, and then sold it. And I'm not happy about that. If they contacted me and I would have said to me, we'll reissue you shares instead of units, or compensate you for what you paid, would have been different. But I would appreciate knowing if anyone else has come across this problem. If you have, please email FCA and email trading212, tell them you're not happy about it. The bigger the complaint, the more likely a proper response. Anyway, that being said, now for the plug time. If you enjoy any of today's entertainment, don't forget to hit the like button. It helps with YouTube algorithm getting the video out to more people. Don't forget to subscribe if you haven't, and I'll see you in the next video. Stay safe, stay savvy, stay investing. Goodbye.